options on futures and retail off-exchange foreign currency transactions, known as Forex, involve substantial risk of loss. It's not suitable for all investors. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There is a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade: equities, options, futures, or Forex. Therefore, you should not invest or risk money that you cannot afford to lose. Why is that an important thing to state at the beginning? Because sometimes I've talked to potential customers and they've said to me, they've looked at the price of our smart technology or whatever, and they said, I really can't afford that at the moment. And my advice to them is then you shouldn't be trading. You shouldn't even be thinking of putting your money at risk if you can't afford $300 a month or whatever it is. You shouldn't put your money in the market because you're probably going to lose it. Because you're already saying, I can't afford, I can't afford, I can't afford. And your brain is telling itself, it can't afford. Well, I'll tell you, and I know this for a fact, if you go to the market and with the view, I can't afford, I need to make money, the market will eat you. You've got to have a different attitude. And I've just met a gentleman who's actually just refitted our complete heating system here in our house in Burley in the New Forest National Park. It's a big property. It's like a farmhouse. And the boiler broke a couple of weeks ago. So we've all had to wrap up in jumpers, and we call them jumpers in England. I don't know what you call them elsewhere, but they're basically big, woolen jumpers to keep warm. But this guy then turns up to fix the boiler, and we got chatting. And as I was talking to this gentleman, lovely guy, he was talking about, he was interested in learning potentially to trade, but he also talked about some of the problems he was having in his life. And it was often about lack of money. I'm having to work this, I'm having to do that. And I talked to him, I said, listen, if you keep thinking that way and you keep thinking of what you don't have, you're going to get more of what you don't have. It's a universal law. I said, I think the complete opposite. I think, even though we've all had our struggles in life, especially this last 6 months, it hasn't been easy for businesses out there. And I work in, and I talk to a lot of connected business people who've really struggled in, they own office blocks. They have retail stores in Southampton and London. These are people I know personally who've built those businesses up for years, and suddenly have seen whipped under their feet all their profits. And unless they had a lot of money in the background, and the background's going to be important as we'll talk about today, but they've lost their livelihoods at the moment. It will change, I can assure you. The markets aren't seeing it, and I'll prove it. So this is exactly the same situation as I felt when in 2008, 2009, when I saw Lehman Brothers going bust. I saw massive opportunity in the financial markets, which is why I was determined to open a fund, which we've done. Thanks to, by the way, a lady in America as well who's in here. I'm not going to mention her name, but you know who you are. For the support she's given us out there, one of our long-standing customers. Our team in Gibraltar, we run a company called TradeGuider Gibraltar Limited. So Gibraltar is a very big part of our life now, certainly my life, and also the team at TradeGuider Limited, who have been very instrumental, including Grigory, of course, in doing and showing what I'm about to show you is because of that team. So why did I write the book? Well, again, my name's Gavin Holmes. Trading in the shadow of the smart money. What does that actually mean? Well, it's very straightforward. It means you're trading in the path of where the big institutional money has put their orders. And you do that not by MACDs, stochastics, moving averages. They're lagging. You're going to use 3 universal laws which work. And there's a 4th one, which is, I believe, to be very important, which I've written about in chapter 9 of my book. The first one is supply and demand. The second one is cause and effect. That's very, very important. Cause and effect is something you don't, sometimes, what do you mean by that? The cause of a move is usually, it's in the volume, because volume is activity. That's it. The volume on your chart, as I'll show you, it's activity. But then you get the third law, effort versus result. That's the key one for me. And you'll see that by analyzing very, very high volume and looking at the range of the price bar, which is the high and the low. And we use multiple time frames. We don't use one time frame. Okay. I'm going to show you today that on stocks, we're using monthly, daily, mainly weekly, daily is what I'm using. I don't really need monthly. I mean, I can get enough information from the daily chart. But some people like to look at big time frames. You can also go down, as I can show you, into 4-hour charts and 1-hour charts and 30-minute charts in stocks and get very, very good indications of the imbalance of the supply and demand situation as it appears. And that is what we are charting here at TradeGuider Systems Gibraltar Limited. We are charting the imbalances of supply and demand, which causes, hence the word cause and effect, market movement change. And I'm going to keep this simple today. I'm not going to focus in on every different indicator that we have because it's only a 2-hour webinar. If you want to find out more about the intricacies of trading and how to do it, then the course that we've put together that starts on Monday goes through, and it's 90 minutes a day. It's not like you've got to give the whole day up. Certainly I couldn't, because I'm trading. So 90 minutes of my day is important to me, but it's good to teach. And we've had a massive response to that. And I'm pleased. And thank you for your support for those who have signed up. So really what I teach and what Grigory also teaches is trading in the shadow of the smart money, which is we trade in the same direction as the smart money. Now, what is interesting with Grigory and how we met, it's not Grigory approached TradeGuider for a job. Grigory was a customer. And Grigory went through the mentorship program pretty similar to the one I'm doing in November, December. And I always remember one day Grigory had logged in, and I'm sure he'll confirm this. And I asked everyone where they were. And Grigory, you can say, I think you were up in a chalet in the Himalayas, and you had one plug. You had either the heating or a computer to listen to the training session. Tell us what happened, because that's a good story.
Yeah, that's true. That's true.
You unplugged the heating when you were there. So you unplugged the heating and you put your computer on to listen to a 2-hour seminar.
I didn't have any choice because there was only one plug in there, only one wallet socket. So either that, either heating or computer. So what can I say?
You don't need to be, you could have frozen. That would have been terrible, but you didn't. Now,
I was just jumping around the computer.
I can imagine it, Grigory. Yeah,
3,000 meters high in Himalayas, and I was in the hotel, and it was about, I would say, 7-8 degrees in the room.
That's cold. That's cold. So let's talk about the trading method that the smart money don't want you to know about. Okay, now I know I'm going to get asked questions on this from those of you who are new, but it says here, this was written in 2013. I've kept it. I use it in many of my webinars. It's in my book. The secret trading strategy from the 1930s that hedge funders don't want you to know about. Well, hold on a second. I'm a hedge funder. So why am I doing webinars? Why am I doing this publicly? Okay, had an email. I'll answer the email right now. The reason I do this, the reason Grigory does it, the reason we do this information and give this information out freely. Most of the time, a lot of the stuff we give away for free. We do charge for certain things. Again, there's certain information that we don't make public, which we will do in certain courses. The reason we do it is when Tom Williams and I first met many years ago, and I'm going to play you a video of Tom in a minute. He said to me, Gav, I'm going to give you all this knowledge. I'm going to give you the information you need to be a very successful fund manager, trader, investor. But please don't keep it to yourself. He said, because in my life, and when he was teaching me this, he would have been 74 at the time, I think. No, maybe earlier than that, maybe 70. He said, please don't keep it to yourself. He said, because what I've learned in my lifetime, and he traveled the world, you know, he lived in Beverly Hills, California, very successful syndicate trader. He said, if you give back to the people and the community and you give them good information and you're trying to help them, and the market's a big place, don't worry. The information you give them is not going to skew the market because everyone is different. They'll all see, you know, you can put 10 people in front of a mountain and there's snow on the top and there's trees at the bottom, and then you ask them to write down what they noticed about that mountain, and you'll probably get 10 different answers. You might get a few that are the same, but that's how human beings are. We see and we hear with our senses, and we don't always see the same thing. We think we do. I saw an interview yesterday. I think it was with Donald. I think it was Biden, but I can't remember exactly. No, it was actually with President Obama, ex-President Obama, and he talked about how divisive politics can be, where people see things from a different viewpoint. We're still all human beings, but we look at things in different ways, you know. And he made the point: there's no one right or wrong way. It just is what it is. I think that was his words, actually, to quote. It is what it is. And we've got to get on. We've got to move through it. I mean, COVID-19, it's here. It is what it is. Whether you believe it to be a conspiracy, whether you believe it to be a fact, it is what it is. It's affected society. But I don't take a view on any of that stuff. I just look at my sphere of people that are with me and working with the company, and I look at the charts. And the charts don't lie. And interestingly, in the book that was written by Richard D. Wyckoff, and let me just ask it before we move on, how many of you here in the room, and it's packed, have heard of the trader from the 1930s called Richard DeMille Wyckoff, R.D. Wyckoff? Just type in yes or no. I'd just be very interested to see how many of you have heard of the Wyckoff trading method. Okay, well, I'm not totally surprised. Few people said no. There's not many, but I would say the majority. Yeah. Oh, it's now going nuts. Okay. Yes. So, in his 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique, it's out of print and somewhat difficult to find these days. Not impossible, because it's on my bookshelf. I've got a signed copy. But even in 2013, hedge fund managers still swear by it. Now, I'm recording this in 2020, but this article was written in 2013, and I can assure you that it's absolutely correct what's stated here, because the method that Wyckoff taught was correct, and it's based on supply and demand. And he used to call it reading the ticker tape. And when I asked Tom Williams about that, he said, Gav, the ticker tape used to come off every day, and we'd have people basically taking the ticker tape off, and I would draw charts based on the ticker tapes, which was basically order flow. That's what it was, and that's what we look at. And it says here, one of the key takeaways from the book that was written by Wyckoff is that if you want to succeed, you have to learn and recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. So I want to play you a video now, very quick one. Some of you seen it, some of you haven't. This will explain how the markets truly work and how they operate. And this is Tom Williams, the man that taught me to trade, who studied Wyckoff. He's done presentations at the Golden Gate University in San Francisco, where I was present. He's done presentations all over the world before he passed away. And I was with him the day he passed in 2016. It's a day I won't forget, November the 7th. But one of the things he made sure, he said, please, Gav, he said this to me before he passed, make sure you pass on this knowledge. And that's the reason I give up my Saturdays like this, as I do all during the week, to share the knowledge. So here's Tom Williams.
Well, the thing is, you see, if you're a professional trader, you've got to do your utmost to buy on low depressed prices And the best way to do that is to create bad news, put out rumors, do whatever you can, seize the opportunity of some serious news coming in, and then the market's markdown hopefully shakes people out of that. There was one example that we used to get up to all sorts of so-called tricks. I mean, we used to trade Teledyne, and Teledyne, the actual company, used to have an annual general meeting in Beverly Hills, and we used to plant people in there. In the meeting, there'd be quite a large room with perhaps several hundred people in there, and all the directors would be sitting up on the stage, you know, behind the table looking out at you. But we'd have planted questions to rather encourage people either to buy or encourage people to sell. We'd be asking awkward questions, like we might stand up and say, is this correct? We've heard secretly that you've got a huge order from Saudi Arabia for your products. And of course, there was complete fabrication. Then the directors would look at each other and sort of shrug their shoulders. But the audience heard that, and they think, they've got something going on, they're keeping it secret. And that would definitely have a nice big surge of buying next day. If you were distributing, we'd say, sure, we'll let you have it all, because we bought in the lows. We're now encouraging people to come in and buy it off us. That goes on all the time, that type of thing. If the opportunity is there, a professional trader will take it.
So let's go and have a look at a quick example of a chart, and I'll tell you a little story behind this. Some of you have already heard it, but some of you haven't. So I was in MIT in Boston, the Massachusetts Institute of Technology, doing a seminar to the Boston Traders Group back in 2010, just as there'd been the oil spill in the Gulf of Mexico. And as the market was plummeting the previous months, everyone was panicking. But I was looking at the previous 10-year low, where I had green indicators coming in, and the volume here was, you couldn't really see it here. It wasn't even that high. But then, just before I did the webinar or the seminar, it was live actually, it was recorded. Look at the volume that came in on the month of the disaster. We cannot cap the well, was the message sent. And yet, our software found a signal on the daily chart called bag holding, which I'm going to talk about shortly. And we'll come to the importance of the new scanners and how we find these. And what does bag holding mean? Now, for some of you that are new, you'll go, what the hell does that mean? It's really logical. If you're a professional trader, you can't buy high. You've got to buy on low depressed prices, which is the complete opposite of what you're taught as a retail trader, because you're taught to look at MACDs, a stochastic, a moving average, candlestick. And as the market starts to rally heavily and the volume increases, you think, because you're getting buy signals, it's time to buy up here at the top, where you could have bought much lower. And so when you do buy at that level, the market suddenly collapses, it plummets. And you lose either all your account, half your account, depending on how good a trader you are, or 1% of your account, but you lose and you go, that doesn't make sense. Everything was in my favor. The trend was going up. I'm a trend trader. I like trends. But the trend was going up. I switched on the TV. The news was good. It was bullish. It told me that this stock is going to go to the moon, or gold was going to 2,500. Rubbish. And then suddenly it collapses. So I'm going to teach you, if you're going to join our course as well over the next 4 weeks, how you identify these opportunities. And I'm going to show you some examples so you can see them now. And there's multiple. But today, I'm going to make a very special announcement. And this is very relevant to all our investors in TradeGuider Gibraltar Limited. Many of you are here. Many of you will listen to the recording. And of course, as many of you know, we're selling some more shares on Tuesday of next week. I think it's Monday or Tuesday of next week. We've got massive support, massive interest. And the reason we have is for what I'm about to show you, because no one else has developed what we've now got. And that puts a massive valuation on our business as a whole, but it also helps us trade not one stock, not 10 stocks, not 100 stocks, but thousands. We have now launched the service out of beta, where we're looking at not just the US market, not just the UK market. We've now got Middle East, we've got Australasia, we've got, well, I'll show you. Okay, so I'm not going to dwell on that. I'm going to show you that. Okay, so what happened here on this particular day, and this is the importance of understanding volume. The market's marked down. This is a monthly chart, by the way, of British Petroleum. The market's marked down. It's in my book, so you'll see this. The news is horrific. As Tom used to say to me, he used to laugh. He said, Gav, the news is bad and it's getting worse. And if you switch on your TV right now or you read your newspapers, the news is potentially quite good because they've found a vaccine. But for the last 8 weeks, the news is bad and it's getting worse. And for many people, it is. News is an enemy to anyone that's got a positive attitude, which is why I don't tend to listen to news other than to look at opportunities to buy or sell, as you'll see. And this will sound odd to you, but if the news is bad and the market's collapsing, I'm looking to buy. If the news is good and the market's gapping up and rallying, I'm looking to sell. Now, that sounds alien to most people. They go, hey, don't be so ridiculous. The market's good, everyone's bullish, and the market's gapped up. Everyone must be buying. You're wrong. You would be wrong in your thoughts. And I'll prove it. Now, I'll show you today just one example of bag holding, which was a good... I'm not going to give you hundreds of examples because I could, because there's hundreds of stocks to look at. I'm going to do that during the course. And we won't look at hundreds. We'll probably look at 20 examples. And these will be individual examples of how the news is used to wrong foot you. You don't know it. I mean, I'm not a fan of Donald Trump, but I'm not negative on Donald Trump at all. But he was the first president to talk about fake news. Now, in the markets, the person that talked about that a lot was Jim Cramer, who was a famous presenter and someone who I think is a great guy. Actually, some of you may not like him, and I've had emails and say, well, we don't, like Cramer. Actually, he's made a really good living. And to be fair, I've watched a lot of his programs, and some of the stuff he comes out with is really genuine and it's good. You've just got to pick out what is entertainment and what is good information. And some of it's good information. And he did do a video with a guy called Anti. Then he did this on market manipulation, and he told the truth. So let me give you an example now. We'll go through some charts. Let me just see if there's any. Yeah, so Vladislav, that's a good question straight away. Jamie just said Trump's going to win. I'd have a bet on that with you, Jamie, but we'll see. I don't think that's going to be true. Vladislav, do I expect stocks to sell off before Christmas? I do, but it's not there today. What I see, Vladislav, is I don't try to be predictive. Even though you think with stocks, you've got to be predictive. I trade what I see. As I'll show you. We'll give you some examples. So as we go through here, just quickly, on the left is my mentor who passed away November the 7th, 2016, Tom Williams. And then someone that's been very important in my life. Obviously, I never met him because he passed away in 1932, I think it was, or 1931, Richard Wyckoff. He passed away, and he was a founder. In 1934, he passed away. And he was a stock market authority. He was the founder and one-time editor of the magazine of Wall Street. And he founded that in 1907. And he edited Stock Market Technique. And he had a following of, I think, 250,000 without the internet and without social media like we're on now. And he said thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future, and that these indications are accurately recorded in the market transaction second by second. And therefore, those who can interpret what transactions take place second by second or moment by moment, which is what we're going to look at, have a distinct advantage over the general trading public. That was Wyckoff's comment in 1914. And then Tom Williams, who born 1929, passed in 2016, said, if you can read a chart correctly, you will understand the markets do not move randomly, but are moved by the smart money. And you can see their intention at support and resistance levels by looking for the telltale footprints hidden in the volume price. And you have a chance to profit by following in their footsteps. Volume is vital in your analysis, which is why the self-regulated exchanges around the world will not release the true volume until the true volume figures are released, which is actually after the trading's taken place. So the next day, basically. Now, here's something that's very new. I'm going to put it up for you. And can you all see my TradeGuider stock scanners screen? First of all, let me just check everyone can see this. So I'm just going to wait to make sure. It takes a bit of time for it to come through, but just if you can type in yes. I need about 10 yeses and then I can carry on here. Brilliant. Good. Okay. So, Gregory, can I bring you in on this first of all, because you've developed this. It was obviously originally Tom's idea, and then I discussed it with you. Now we have it. We've got things that are still being added to this, like the sector scans. We've got the index scans. All of these things that are to do with the stock market, but a lot of the stuff that we're seeing in here can be, if you've got Smart Center Pro, which is what I'm using, you can find these indicators in smaller time frames using the software. But let's just talk for this moment in time about this new service, which we're launching officially this weekend. Gregory, first and foremost, let's talk about indicators. Now, we haven't called them buy and sell signal scan. We could have, because you've got red and green, but we haven't called it that. We've called it an indicator. And in TradeGuider, I believe there's over 300 indicators. I don't know the exact number, but the most important ones that we want to look at are the ones with what we call climactic volume, which is ultra high volume. That's the elephant putting the footprint in your garden. So if an elephant was to walk across your backyard and you've got nice grass like I've got across my yard in the back here, and an elephant walks in, and I know this to be true because I had a horse in here the other day and it's destroyed some of the garden with its hoofs because it's heavy. And I don't know how the thing got in, but I'm trying to figure that out. But if an elephant walks across a garden, it's going to leave a footprint. Gregory, why is ultra high? Let's start with that question first. Why is ultra high volume on a chart so important to the trader and investor that wants to make money?
Volume is an activity. So what professionals are doing at the point of time, specific point of time. If we are talking about huge volume, it means that professionals are jumping in and doing something. We can't define, without confirmations, we can't define what exactly are they going to do, but at the same time, we can see that they are doing something. And if you remember, our task is to define the direction of the smart money and follow the smart money in our trading. So the first and the most important step is to identify an areas where professionals are jumping in with the serious buying or selling, and then to analyze their next steps and follow them at the end.
And here's a good example. So we had an indicator that came in a couple of weeks ago on Gregory's system that he's developed. And this is a very interesting one because you get different types of bag holding signals, but this is the signal. So now let me change the word signal so we're not confused. It's an indicator. I'm going to ask the audience a question. And I'd like you to answer it, all of you, if you can, please, because this will help you to learn this. First of all, what do you notice on this bar here? And I'm going to put the indicator up. Okay. What do you notice about the range, which is the high and the low of the bar, often we refer to it as a spread. What do you notice about that range compared to these other ones? Just type in, what do you notice? Please all type in. Don't get involved, because this is how you learn. This is how you pick stuff up. Keep typing. I'm seeing loads of people typing in. I mean, I know it sounds obvious, but this is gonna solidify in your mind what I'm about to show you and why this works. Okay, and I could show you multiple examples of this that happened last week. Yep. Okay, so I mean, everyone's typing in much the same thing. Massive, enormous, very big. Yeah. Okay. Well, it is. And look at the volume here. Okay. Now we have in our smart center technology this. I don't know who invented this. It certainly wasn't Grigory. I think it was the previous program, Bob Harwood, who's a lovely guy. He's passed away as well, but he invented this to show us unusually high volume. And so when we get into the salmon colored area, which is this area here, we know we've got to pay attention, just as we did here. So now the market goes up, but then suddenly it's marked straight back down. And I wouldn't ever have bought into there. You can't do it, because ultimately there's a lot of supply and demand in that bar. It's too confusing. But then in our system here, which I'm going to show you the Middle East, I'm going to come to that, Ahmed, on the Middle East market. We've got Australia, we've got Europe, we've got them all now. 50, I don't know how many thousands of stocks it is, but it's thousands. But the point is, we get indications of where the market either rallies or falls or gives us a change in behavior. Now, you'll notice I'm using a daily and a weekly, but I've also got a 4-hour chart and a 60-minute chart. Okay, this is the clue. I'm not just using the daily, but I'm waiting for the indicator to prove to me there's about to be some sort of markup. And there it is. Now, I'm going to ask you a question again. Please do type in. You can see the volume is increasing on the down move, so that as the market's falling, the volume's moving higher. Now, what do you notice about the range or spread on that bar? Here, this one. What do you notice about the range or spread compared to this one? This is such an important lesson. Type in what, I mean, this is so key. And if you don't want to learn VSA, you just look at, and you could, of course, this is the wonderful thing about having the software. We find these as they happen. You don't have to scan through thousands of charts anymore. Well, you couldn't. Human being couldn't do it. Software is very good at that, as we'll talk to Grigory about in a minute. Yeah, the range is narrowed, but that's not the clue. That isn't the clue. Can anyone tell me what the clue, and I'm talking as a detective now, what is the clue in that price bar that the market's about to change? Oh, I'll tell you what, Grigory, if you look at the questions coming in here and the answers, people are getting it.
Yeah, I can see quite a lot of good responses.
Yeah, people are getting this. So the message is there. It's very simple. We don't close on the high. We don't close on the low. We close in the middle. So what does that tell us? Very straightforward. Demand has overcome supply at this level. The institutional players have bought on this breakout low where the previous support level was, which we can see it, and the market then gaps up and continues to rally, and then it's had a correction, not a big one, and it's into what we call a trend cluster. And these are very powerful. They're underestimated by many. I use them every day in my trading, and these trend clusters are little diamonds that you can see in your screen here, and they're purple, they're orange, or they're grey. But what they represent is support and resistance levels going back, and I can probably show you, I will show you this, because this is quite extraordinary how when you look at this, you go, hey, that doesn't make any sense. But actually, I know Grigory did have this, and it shows you what Tom Williams was very interested in. was volume, obviously, which we know, but he was very interested in support and resistance levels that go back in the past. And when you look at those support and resistance levels, they are based on trend lines, basically. So the computer is very good at connecting the dots of trend lines. It's very good at doing it. And if you basically plotted those lines, all of them on a chart, this is what it would look like. I'll show you. And this is, by the way, I'll give credit to Grigory. This isn't my screen. I'll just take it here. And again, let me know when you can see this, and I'll show you what I mean. Can everyone see that? And I'll explain it shortly and what it means. And it's important, and it's very important in making a trading and investing decision. Yeah. What do you see there? What you see is thousands of lines, and they're going back in history on a chart, which you won't even probably look at. It could go back thousands of bars. But because we're dealing with human nature in trading, support and resistance levels, as we can certainly see with bag holding, they work. So I'm going to bring Grigory in on this. This looks like something that Ryan or Dennis did in an art project, but of course, and Dennis is Grigory's son and Ryan's my son. But this looks like a complete mess, but actually, from a trader's perspective, it's golden because it's showing us key levels. So Grigory, just in your words, why do these lines, which you've now created into just a few dots at the right edge of the chart, and they relearn themselves, by the way, they don't stay there because price doesn't stay there. Why do they work so well? And in Smart Center Pro, which I'm using most of my intraday trading off these areas, which I know I use, with confirmation from VSA. I mean, it's what Tom Williams taught me: support and resistance, or trend channels, followed by VSA principles, and that's why we've been successful. But some people don't get this. So why are these things so important?
One of the customers has called this picture as insane, and I would agree with him, because such many lines in different levels showing what computer does on every new bar. So why those lines are working, why we are getting those areas of support resistance, as we are calling trend clusters, they are not lines, they are areas in a places of the chart where they are drawn. Why they are working? Our tests have shown that in the places where those clusters are located, at least at the beginning of the bar, we can see a lot of limit orders. And those limit orders are preventing the price to go through this level. And this is the reason why they are working. Why we do have a lot of orders around those trend clusters? There is also an explanation, because traders are usually setting up their stop losses and profit targets around peaks and bottoms of the chart. And what those lines are doing, they are analyzing those peaks and bottoms of the chart. And if we will get in the right side of the chart on unfinished bar, many different interactions of this line or intersections of this line, then it might be a very good place where, or very probable place where customers will set their orders. So that is one of the reasons why those areas are so strong and why they are working that very well.
interestingly, this is now, I'm just going to talk about bag holding for a minute because I've got multiple alerts in different instruments where this has appeared. The best place to see it now, in this case, this is one of my favorites, is where it doesn't matter about the trend too much here. It's been choppy. You've got the shakeout and the market is just taken below where the shakeout bar was. And then the spread is narrow, but the gap up is a clue. But this is a clue too. And that was actually where I actually bought the stock. Now, I basically trailed a stop up, and there you can use option strategies. But now we got stuck in a cluster. Now here they are. The market fell. Okay, it's going to do this in this type of environment. You're going to get what we call choppy charts, and we're going to go through some of the charts in a minute. We're going to go through gold. We're going to look at the NASDAQ. We're going to look at the S&P. Here's the key. If you know that something like that has happened and it's on the chart, and this is exactly how I start my Monday morning. Well, actually, it's my Sunday night, but it's usually, you know, I get up on Monday and look at the charts more. Here's what we do, and I'll go through the process with you so you can all understand it. Now, I do have a trading plan, and I do have a series of plans that you can download. You can get them. Now, the place you can go if you want to find out more, and I'll just put this up here now. Let me just put it on the other screen. For those who, especially those of you watching on YouTube, is www.tradeguider.com/intro. Okay, I'm just gonna. Okay. And so again, if you can let me know that you can see my screen here. This is called Wyckoff Volume Spread Analysis in Action. Vendi, to answer your question, yeah, the ideal scenario is when they bring the market back down into that area and test it successfully. Yeah, absolutely. Absolutely was what I'm looking for. Yeah, what I tell, look, at the end of the day, when you're looking at trading, I scale into a trade. I don't put all my money into a trade. I go small first and then scale into that trade. So if I see bag holdings, this is what Tom taught me. He said, right, that BP, that thing just took off. He said, what we'll do is we'll buy 5,000 shares and then we'll buy another 5,000 and another 5,000. And we'll do it incrementally over a period of 6 weeks, 8 weeks. So not putting all our capital at risk. No, we wouldn't put all our capital, but let's say 1% of the capital or 0.5%. We're doing over incremental time periods, and it's called pyramiding. Some of you will, well, you'll teach it in the course. You pyramid. So what you do, if you see a really, let's say you're really comfortable with your risk assessment, and you're saying, look, I'm trading 10 million. Okay, that's fine, whatever it is. And you go, I tell you what, I see an opportunity there. I'm going to risk £10,000, okay, on this trade. So I'm going to put my trade in at 10 grand. And you're buying common, like you're not necessarily going in with puts, or you're not going to use options trading strategies, which can be used. But you're gonna just buy common, and so you're going to buy the underlying stock because it's fallen. Like the great example I would use would be IAG, British Airways, several weeks ago, which I bought. Now that stock had everything was terrible, but it went up 40%. Where did I get the information from? I didn't get it from the media, and I didn't get it from a friend. I didn't get a tip. It was in the chart, and the chart doesn't lie. Which is true. Here is I'll just play this bit quickly. I'm not going to play the whole thing, but you can, well, actually we will, because it's interesting. And this was Dukascopy. Some of you will have heard.
Welcome to the DukascopyTrader contest winner for June. Performance raising his equity 15-fold, achieving a record-breaking million, 500,000. He flew here to Geneva to explain to me how he did it. How did you pull off such an amazing performance in June?
It took a lot of discipline. I stuck to my system. I used volume spread analysis, cycles, Elliott waves.
And what have you been doing up until now? How have you sort of managed to sort of train yourself in Forex?
I've read quite a lot of books, and one of the things that really counts is experience in foreign exchange. There are some things that you notice that you don't notice when you first start trading, and those really help.
And so what have you learned along the way then? What have been your biggest challenges, would you say?
Basically, when I started foreign exchange, I wasn't used to the whole idea of trading on 100-fold leverage. And even on my real accounts, I keep to 10-fold usually. So one of the things is risk control, not getting married to the trend. But what's most important is that you have a system.
And what would you say to the people that haven't been quite successful in the contest? Could you say about having a system in place? Have you got any sort of tips for those people?
In my experience, trading off of fundamentals doesn't work. Trading off MACDs, stochastics, RSIs don't work that well. I stick to volume spread analysis, and I think that's the best.
And in terms of currency pairs, you are versatile with this. How do you manage that? Why do you choose to do that and not stick to the one or the two?
For my real trading, I actually really prefer euro dollar and Aussie dollar and sterling, but euro dollar mainly. For the contest, we go up to 5 pairs. So I added USD NOK and USD SEK just to add pips. And they correlate really well with the majors.
So as a person, as a trader, what's the next step for you? What's your ambition?
I've been using the contest primarily as a training for the real money contest. Last year, I blew up 2 accounts trying to aim for the watch, and that didn't work out well.
So perhaps we'll see you in a few months' time then and be presenting you with that watch. I do hope so.
Yes.
Okay, so let's talk about the contest. How has the experience been for you with the contest?
The contest has been great.
So let's just go back for a second. A couple of questions came in. Okay, and I appreciate people who are new say, can this work for me? Okay, that's a great. I'm this, and look, I understand that. Let me give you the analogy that I used with a gentleman I did a demo to last week. Very high net worth individual based in Saudi Arabia, and got a lot of money, wants to trade his own money, which is fine. And he said, look, I've just found you from a friend of mine. I brought your book, got the information. I really want to start trading. How long is it going to take me? Okay, that was the first question, which is an interesting one. And I said, let me use an analogy that I'm going through right now. So I used to play golf, and I was rubbish, absolute rubbish. Okay, I was probably 35. I mean, I was terrible. And my dad had a lovely house on a golf course in France. So we had I had everything there, but I was a bit lazy. I didn't want to go and have lessons. But what I did do is I brought, some nice golf trousers, nice top, lovely shoes. I spent money on. I think I spent about £1,000. It was on Ping. Some of you will know that they're golf clubs. And I thought, I've got all the kit. I'll be hitting scratch next week. No worries. Well, I went out on that. Well, first of all, I went on the driving range and made a complete fool of myself. And then I thought, well, look, it'll be much better on the course. And this is absolutely, this is what happened. I was in a competition the next morning, which my dad had entered me into in La Tronche, which is in France. And it's near Saint-Malo, for those of you that know this, that you know the area. And I was out with 4 other French guys, so there's 5 of us. And they were brilliant. I mean, these guys have practiced every day. I mean, and they told me, they said, we come out every morning at 6 a.m. and before we go to work. And I'm like, oh, that's good. They said, how often do you practice? I said, I've just started. And they went, oh. So we got onto the 8th tee. I made a complete hash of everything. So I'd lost balls. I was never going to get, I came lost. I'll be honest, I came lost. But I got onto the tee, the 8th tee, and it was over a pool of water. And I hit the ball 7 times. It went in the water. And these French guys are looking at me. And in the end, one of them, he picked up my ball off the tee before I hit it, and he threw it across the water at the hole, and it nearly went in. And he said, "Well, call that 3." Now, why do I say that about trading? Because people come into the industry and they come into trading and they think they're going to get it right real quick, and you're not. So don't think we're going to tell you. And Gregory will come in on this. You don't get it instantly, but you will get it with a bit of perseverance. Now, some examples, which you can go to TradeGuider.com/intro. Yeah, and this is an article here by Earl Erenler, who's a great guy that we've worked with in the past. And he said in his studies of the markets, Erenler came upon the book Master the Markets by Tom Williams, which many of you have got. He began using the methods in this book in June of 2007, so we're going back a while. But he credits his reliance on this approach, which includes Wyckoff theory. And one of these reasons, he began to see consistent profitability. That's all you need. Okay. And since the end of 2008, Erenler has been trading full time. And then we go on, and you can read the article. I'm not going to read the whole thing. But what I do want to draw your attention to, which I think is a very valuable article, is the interview with Tim Rayment. And you can go and read it. So I'm not going to read a lot of, Tim has been in touch with us over the past few years in various ways, but I've never met him personally, by the way, and I've never talked to him. But one thing that Tim has got in common with all of us is I think he wants to tell people how things work. And one of the things he said here, which I think is very important in the article, and he won the Forex Trading Championship twice using volume spread analysis. He said in 1998, Rayment had the good fortune to connect with Tom Williams, the creator of volume spread analysis. I rang him and he was very reluctant to sell me his software. That was true. Tom told me that. He said, trading is very difficult, a bit like golf. And he said, I insisted and agreed I'd pay £5,000 in installments, Rayment says. These days, if I'm asked by someone who is starting out in trading for advice, the first place I send them is the TradeGuider website. For me, it demystified the markets to a great extent. So let's demystify the markets a little bit. And then, Gregory, I just want to bring you in before I go to gold and silver and the NASDAQ. We've said, I've got end of a rising market and all of these, but most importantly, we have over here the sectors. Now we've got the Middle Eastern market, okay, which you can see. We've got Australasian market, so we've got Australia, and all of these are picking up on weekly and daily timeframes, key principles. We've got the European market now available. The UK was already available at the US, and we've got the index scan. Now, the index scan, I'll come to it because we're going to go and finish the webinar on why the index scan is so important. And we're also going to look at why the indicator scan is important. Why is a scanner so important to an individual trader? Because it does things that human beings cannot do. Computers are incredibly good, as Tom said, at sorting through data at massive speed to give you information. And we all know that what we need as traders and investors is good information. And that's what this does. Now, the other question I'll answer from Stephen, and you've emailed me this morning, I'll answer that question, is what size account can one trade if you're just starting out in this? And I would answer that question by saying, how much can you afford to lose? And I hate to say that, but it's true. How much could you afford to lose? So if you've got 5 million in the bank and you could say I could lose $1 million, then you open a £1 million account, right? If you say I've got $5,000, but actually I can only afford to lose $500, then you're going to have to find a broker that will take you for $500. There won't be many. A couple of Forex brokers will, but it's what you can afford to lose. And what do I mean afford to lose? And this is the rule. And this is something I'm going to be drilling in to all of our attendees over the next 4 weeks. You trade what you can afford to lose. What does afford? No one wants to afford to lose anything, but you've got to think that way. You've got to think risk averse. you've got to think about not how much money you're going to make. Yes, that will happen, but you've got to manage risk. If you can manage risk and understand the chart, I'd say you've got 80% chance of being successful. But it doesn't happen overnight. It takes time, and it's taken me time. And it doesn't, you know, if everyone could do this in 2 days, of course, marvelous. What we have done is produce a course. And this course has got a basic part of it, which gives you the basics, and then you can get more involved. If you've been doing this for 15 years, it doesn't matter. I've been doing this for much longer. Talking to Philip, it doesn't matter. You're still learning as you go through this. Now, these are some of the scans that we've done, and I want to bring Grigory back in here. So, Grigory, welcome back to the webinar. Just do a quick sound check and make sure everyone can see this.
Yep, I'm here. Can you hear me?
Yeah, okay. So I'm trying to summarize this, but I think it's important. Obviously, we've got the various markets. First of all, we have stocks that are overperforming or underperforming the index based on proprietary stuff that we've done. And it works brilliantly. I have to say, it's superb. Now, I don't want you to give away the crown jewels, because obviously, with our investors, we'll explain this in a bit more detail. And by the way, just for those of you that are invested in TradeGuider Gibraltar Limited or are going to do so, we're hoping, and I've just had an email back now, that we're going to do an event in Gibraltar in February of next year based on COVID-19, and also in New York City. So, and that will be a meeting of minds, and I'm hoping that's going to happen. But I've heard from the estate, or from the travel agent, and it's all based on what happens on the 2nd of December. Are they going to lock everything down? We don't know. But would we like to get everyone together? Yes, and show you some new stuff we're not making public right now. But Gregory, just talk about this scanning service, because it was originally built into our end of day software. Now it's on the web, it's available, it's accessible to everyone that subscribes to it. And I'm going to be spending a lot of time over the coming weeks talking about trading stocks, as well as futures and forex, of course, and commodities. What is this based on? How does it work?
Each country has one or several indices. And of course, those indices are rotating, sectors are rotating, and what we are looking for in this particular index scan is the comparison with this parent index or sector index. Sector indices will come later on, but parent indices are working already now. So how does it work? We are taking 3 different intervals of daily and weekly charts and comparing parent index and each particular stock under this index in those intervals. So we are talking about short-term comparison, which takes about 3 weeks of bars. We are talking about medium-term comparison between stock and parent index, which takes approximately 20 weeks. And when we are talking about long-term, we are talking about 2 years. Why do we need all these 3 types? If you are trading intraday, and by the way, there are a lot of questions, can you use that for intraday trades? So if you are talking about intraday trading, then you can definitely use short-term comparison with the parent index, and that will give you a general understanding if the index if the stock overperforming an index or if it's underperforming. If we're talking about a swing type of trading, which are taking approximately a couple of weeks, months, then we may use medium-term analysis. And if we are talking about investments, then you most probably will be using a long-term comparison. And this gives you the possibility to select what will you use, what will you choose from that, and to use that in your particular trading. There are a lot of questions. Everyone knows that we can sell stocks only when we have already purchased them. And there are a lot of questions why we are showing the stocks overperforming and underperforming an index. First of all, if stock starts to underperform an index, most probably this is the time to move your stops close to the price. Secondly, a lot of our customers are trading CFDs. As you know, CFDs might be bought or might be sold in a similar way, like futures, like Forex market. So you don't need to have the stock or shares to sell CFDs. You can just sell it, and that's it. When we are talking about underperforming or overperforming, it doesn't mean that the trend of the instrument itself or the stock itself is up or down. And we just added, and you know, we are in a beta testing, final stage of beta testing at the moment of these services. And based on the feedbacks, we've added the direction of the trend on this particular instrument. So you can see the triangles, red triangles, green triangles, and the gray triangles. So green ones showing the trend is up, red ones, of course, the trend is down, and gray trend is undefined. You can use that as well. So yeah, exactly what Jan shows, just this on the screen. From Wyckoff, we know that if you want to buy stock, you need to use the stocks which are overperforming an index. If you would like to sell stocks, then you need to sell the stocks or CFDs. You need to sell those stocks which are underperforming an index. So this is why that type of scanning is extremely important. We will be able to identify here what type of stocks might be bought or might be sold. There were a lot of questions about what type of markets we are supporting. So if we are talking about European markets, well, of course, for US and UK, it's already available for a month, I think. If we are talking about European market, we are covering most of the indices from the Europe. It's German indices, Sweden, Switzerland, Finland, I mean, Denmark. I mean, almost all the countries have their own index. If we are talking about Australia, we are supporting Australasia. We are supporting also the biggest countries, indices of the biggest countries like Australia, New Zealand, China, Hong Kong, India, Taiwan. So these will be available also in the list. Quite a lot of indices, a lot of stocks. We are talking about approximately 10,000 stocks from the major indices in there. If we are talking about Middle East markets, so we are talking about Egypt, Saudi Arabia, United Arab Emirates, a couple of exchanges in Emirates like Abu Dhabi exchange, Dubai exchange. We are talking about Oman, Qatar, so the biggest countries in the area. And also a lot of indices here. And this number will be increased. We will add some indices here as well. More indices will be available in the future.
Yeah, we've got a couple of questions have come in. Samir is asking, does the indicator scanning service work for Saudi Arabian stocks? The answer is clearly yes. So you can see there. So that answers that one. Mustafa, can we look at the Saudi market? Sure. I'll just put that up. And there you are. Mustafa, I'll happily show you this one-to-one if you want to. I mean, I'm looking at I mean, we don't just buy and sell based on this. Please be clear. Let me make that very clear. We now have access to all the data, and we're able to then look at the individual stocks once we look. It's a bit like the bag holding signal. You know, this is telling us which stocks are acting stronger and weaker than the index, but then in certain countries you can't sell, you can only buy. Now, what I would be looking for, certainly with VSA, is a stock that has got some bad news associated with it. It's falling, and then we get a bag holding signal. And we can do that with Smart Center Pro, which I know you've already got. So yeah, this is very, very, very powerful stuff. All right, let's go and finish off then before I take further questions with some charts.
Gavin, can I interrupt you for a second? Can you get back to the scanning service?
Sure.
Can you show this? Yeah, I can see that now. Can you go a bit higher just to see a menu? Because there is another service what you guys may look at, which is called Trading Alerts. Can you please click on that? Trade alerts are also available right now. And can you go to the stocks, please?
Forex trade alert, stocks trade alert, stocks trade alert, trade alert.
Yeah, sorry, which one do you want me to look at, Gregory?
Stocks.
Yep.
Well, it doesn't matter which one. We have all of them right now. For example, Middle East, you can show.
Yeah, there we go.
Yeah. So this is a bit different service from what you've seen a couple of minutes ago. Here we are providing educational alerts with the stop loss and take profit, and this is, as I've said, educational alerts. What does it mean? You will need to analyze what price is going to do around the open price level, and if it follows the rules which are described in a manual, then you can go and open the trade. But this service also has another very interesting angle. It's based on the ultra high, huge, I would say, not just ultra high, but huge volume bars. So even you are not going to trade that stock in a way as we are suggesting you to do, you can still analyze that on the chart and see a huge volume bars around the entry point. Why do we need that? We have already discussed why the huge volume is so important. If we are talking about indicator scan, we are scanning only two types of indicators: back holding and end of the rising market. They are those are indicators on a very high and ultra high volume bars, which is those indicators are key indicators in VSA, no doubts about that. But this approach is a bit different. It doesn't analyze the indicators, it's analyzing just ultra high volume bars and areas, the tops and bottoms of those bars. And this is how the alerts are built. So even if you're not going to trade these, you may still analyze and find if you know how VSA works, you can still analyze the chart and see a lot of interesting stocks here. Back to you, Gavin.
So, yeah. So just to summarize there, what this particular system is doing, which I'm using for the fund as well, is it's finding the what I call triggers in my book. I've talked about trigger numbers, and then it's giving you not an exact entry, but it's saying this is where we expect the market to go based on the system. Now, the questions just come in on an email from Stephen again. How are you computering this? How are you getting all this? I can't tell you the name of the data feed. I'm not allowed to. I'm under an NDA. Secondly, we're using a cloud server, so we're using a very powerful server. And then he says it's impossible to scan over a few thousand stocks. And well, Gregory, but it's not, because we're doing it. I mean, so
well, it's not just a few thousand stocks, Gavin. We are talking at the moment, as of today, we are talking about 32,000 and even more. And it's going to increase. We are going to add more indices. We are going to add more stocks there. It's just a question of time. This is why we are still in beta testing of that. It's not because, I mean, we are beta testing that because we are waiting for your comments. And again, the trend, what we've added into index scans, it's based on your suggestions. So if you are already using this service, you are welcome to submit your comments, and we will very appreciate your comments here, because we would like to improve this service. We would like to make it better, because this service is for you guys.
Yeah, and I've got quite a lot. I've got loads of questions coming. I'm not going to be able to answer all of them because I want to do the gold analysis, which everyone has asked for. Let me just go through a few questions. Yes, with the fund is a privately traded fund, so we're not public. And when we go public, and also when our Gibraltar company goes public, that's going to be March of next year. And yes, we will absolutely produce audited accounts. We've already appointed accountants to do those. That will be made public, and you'll be able to see the trading that we've done. Absolutely fine. We've got no issues with that. But we're not a public hedge fund as such right now. We're privately traded with our own money. So, and a lot of that is because we've been testing stuff as well. We didn't want to take money in that we didn't, we weren't sure with our system that was going to produce the results that we're expecting. So we've put our own money in, and now we're very confident that by, certainly I'd say, 1st of March next year, 2021, we'll have the results that people are looking for. At the end of the day, though, I've seen so many fund managers who've done really well and then, gone down the toilet. I don't want to do that. What I'd like to do is ensure that the system is not reliant on an individual like myself, but it's reliant on a strategy or strategies, which I believe we do have in place. And a lot of it is reliant on computerized alerts like you're seeing. And then I know I've been asked this several times because I've talked to quite a few potential investors last week in our company, TradeGuider Gibraltar Limited. Are you going to completely automate this to the point that the human being doesn't have any involvement in that? And the answer to that question is, at the moment, no. I still believe it's important to have human interaction with the charts. But is it possible? Well, is it possible that, you can put a man in space? I've been to NASA. I've seen the latest SpaceX rocket getting there. Anything's possible. It's time and money. But Gregory's always told me that. He said, look, when I said to him, can we do this? He said, well, we could, but it's time and money. And of course it's true. We could do lots of things. Do we want to automate this? I'm not necessarily sure that automation is the answer. I think the answer has got to be about having great traders with great minds, with great vision, human beings, who can use the information that's coming from the system and make great decisions. And that's what we've got. At the moment, that's exactly what we've got. And we will prove that. Now, Gregory, I want to go to a chart now. This can be I know some of you have now emailed me. If you don't email me, some people said, I'm interested in investing in the company. We're going with our next fundraise next Tuesday, I've just been told, is when the fundraise is. There's 6% of the shares in TradeGuider Gibraltar Limited. If you want to see the business plan and the deck, email Richard B okay, at TradeGuider.com. I'm gonna put it in the room here so you've got it, because I'm getting loads of people emailing me, and I'm not going to be able to respond. So if you are interested at seeing our plan for the future, which is fine, you don't have to invest, but we've got a deck. They call it a deck, and I know a lot of you have been emailing in and asking for it. Then it's very straightforward. It's Richard B, okay, at TradeGuider.com. Let me just put that in here in the chat window, so just bear with me. Yeah, no, Steve, I've emailed it to you. Just go, I'll put it in caps. Just email Richard B for Bednall at TradeGuider.com, and basically it will just send you the information, and then you have to approach us, obviously, to say you're interested. But I know many of you already have, so I'm just putting that out there. You've already approached us. You've got the questions. The questions that have come in, we're answering right now. Can everyone see that, by the way? I've just put that in, and just type in deck in the subject line so Richard knows what you're looking at. So to finish, I'm going to go straight to gold, because I know a lot of you've seen quite a lot of information about this, and there's some very interesting stuff going on in gold, and we'll come up here. And can everyone see my 4-hour chart of gold? Lance, I would agree with your statement. We are living in a world of artificial intelligence, and yes, it's possible it could be used. We're not. I still believe, however, that while AI is here and it's probably here to stay, it's not necessarily going to be the be-all and end-all of everything. I think there will be human interaction. That's not going to change. And in trading, there's always going to be an edge somewhere. Okay, everyone can see it. Good.
There is a question from Vladislav. It's not a question, it's a statement that at present there more than 80% trades are made by the computers, algo trading. And it is true, but what they are doing, they are entering the number of lots, what they want to place in the market. It's not the trading as such. So if you do have thousands and thousands of the lots to be bought or sold, you can't do that easily manually. So what they are doing, they are setting up the level, and they are the software or algo trading, they are placing automatically and orders around those levels. They are moving price up and down. It's not a trading as such. It's just the placement of the orders. And the logic of exit is similar. So they are exiting from the trades in the same way, by using algos. But the analysis itself, where a price should go, for how long, etc., it's still done manually by human brain. So yes, 80% of trades or positioning, as I'm calling that, is done automatically, but the logic behind an analysis is still done by the human brain. And actually, this is how the world right now is living.
Well, I totally agree. Yeah. I mean, let's finish off with gold, because I've got a lot of questions on it, and this follows through. So again, what we see here, and I'm going to play this forward. It's a 4-hour chart, which I've been trading. Now we've got here what we call supply coming in, and it took the market down a little bit, and then it popped back up. But I couldn't see any change in behavior in the market, which is what I look for. So the green in the Smart Center Pro and everything was still green, nothing going on. But then this happened. All right, you can see what happened. All right, now we've got a very, very interesting price bar. Okay, you should all be aware of it. Now that is market manipulation. So basically now we've got a real problem here in gold, in that we've got this slam down in price, and it was very visible on the smaller time frames as it came through. But I want to draw your attention to what happened at the close. Okay, we've got the buying climax, and this is a 4-hour chart. So if you want to set up and take away from this webinar what we're going to look at, here's it. Okay, because you're giving your time listening to this. So here's what you're going to look at, and it's very clear. If I mark the close of this price here on this big bar, look at where the climactic bar hit. Now, when I talked about effort versus result, do you take the trade and short it now? Well, you couldn't, it's Saturday, but next week. No, you wait for it to go through there and into this area. There's where your money is. That's where I put on 100 lots as it breaks into this area. Now, I'm telling you this in advance. You cannot take the trade if the market pushes through that top. Cannot take it to short. You can't short it. I wouldn't be long, but do you have some support here? Yes, there's definitely some support. That's why it's knocked sideways. At the moment, if any analyst was a VSA analyst was looking at that chart, it's not immediately obvious where to go. And so what does that tell us? No trade, which is what I talked about in the email. In this instance, and it's Saturday, it's because we've got no data coming in, no trade. But if you're smart, and we talk about smart money, then you'll understand that someone and some group has positioned themselves here. Now, I don't, because of this chopping here, you'd struggle to make money in this area. You'd struggle because you've got change of trend. You've got mixed messages. You've got buying, selling, buying, selling. I'm not a betting person, but I don't bet. I just look at the chart. And if it starts to break this area into here, I can take 1870 down to 1850 with 50 lots and make a really good killing. And that's the sort of thing that we've got to look at. Well, it doesn't matter. Forget, Jamie, forget size. Let's not worry about whether it's 10 lots, 1 lot, 100 lots, 500 lots. You're trading a 50 million account. 100 lots is nothing. Okay, it sounds a lot to an individual. They go, oh my goodness, but remember, it's the numbers game. You've just got to make sure you don't put in a 100 lot order because you'll be seen on level 2 in the market. You can't do that. You've got to do it incrementally if you're going to make money in these markets. It means that you see the market moving in your favor, you add another 5, you add another 10. You don't want to put yourself on the radar because the market maker sees it, and their job is to make sure that you don't make money. So Piggy says, I think the volume has this time function. Well, it's not actually. I'll show you why. And we'll end on this. I'm using Smart Center Pro. Okay, now this is not live. Remember, the market's closed, but I'm using multiple time frame analysis. And you're absolutely right. One of the biggest, and this is down to Piki, says it comes down to timing, and timing is everything. You're absolutely right, because you're sitting at a screen. Maybe if you're like me, 10 hours a day. It could be longer. I'm looking at this. I'm looking at a 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, 15 minute, 60, 40, 240. I'm looking at those time frames and I'm seeing when they align. And when they align, bang, I've got my trade because they're aligning. And the fact is, one of the things you don't want to do is you don't want to trade when things are, well, if they were like this today and I was trading live on a Monday or Tuesday, there's no alignment. So I wouldn't trade them at all. There's no point, because all you're doing is going into a whipsawing market, which can go in your favor for a few minutes and then come straight back up and hit you. No point. What you're trying to do if you want to make money in this business is find the optimum trade. And what I mean by that is the one that looks exactly right from a VSA perspective, and we have all the scanners that do that. So look, we'll talk about this next week. I've just seen some people signing up. Thank you very much. TradeGuider.com/intro. Go and have a look. You know, you don't have to take my word for it. This works. You know, I would say it, wouldn't I? Because I'm the CEO of the company. But have a look. I mean, there is the link. I've just put it in the chat window, and you can have a look at the interviews. You can have a look at the presentation I did at London Financial Forum, the London Banking Hall in the City of London. Fortunately, I was a little bit heavier than I am now. I've actually lost 2.5 stone because I've been running around the forest, running away from deer and donkeys and pigs. That's not far off the truth either. You want more information? Okay, so what I would suggest is what I use to trade and what I've used in all the YouTube videos is the Smart Center Pro package. And there is a promotion that we're doing over the weekend. I think the marketing guys have called it like Black Friday, is it? Black Monday? I think it's Black Friday, but anyway, here it is. I'll put it up in the room. Go and have a look. And then if you're interested and you want to get involved, or you want to come on the seminar next week, starts on Monday, you've got the whole weekend to take a look at it. I will put in the window here. Let me just put it in now. Both web links, so you've got them. Okay, but you can go to TradeGuider.com. You'll actually see it. But the information about the course. Oh yes, thank you very much indeed, John. I appreciate that. This is something that you should definitely go and look at, and you should see it now. The blog, and this has got some really good stuff on it. And again, completely free, but it's got some really good articles on VSA and what we've been talking about here today. Okay. Yeah, I can have a quick look at the NASDAQ. I'm just put those things up, and let's go back to. Okay, you go to TradeGuider.com, John, and you just go to the front page, click on events, and that is the link right here. Starts on Monday. You can click on that, and that gives you full details. So I don't need to explain it. You've got it here. But you can see it on the screen. It's just TradeGuider.com/autumn. Very easy to, yeah, absolutely. It's straightforward. Yeah. We'll go and have a quick look at the NASI. And again, it's not dissimilar to what I've been seeing in gold. You've got markups here. You've got lots of end of a rising markets in stocks. You've got this line at the top, which I've drawn, which is called the trigger number. Here's your weakness at the top. Let's just get rid of that for a second. And right up here, no demand, into an area of weakness where the market's marked up. It's pulled back. Now it's in no man's land, if I'm being honest, which I think will change. I think we'll see a breakout, possibly as early as Monday or even Tuesday. We'll see it. It'll go. I think it's going to break this low, and then we're going to have great shorts. And if we are doing the live training, that's a great opportunity, because what happens is when I'm doing the training, I've got prepared PowerPoint slides to teach you, but then on the back of that, I've got my screens with all the live charts coming in. If there's an opportunity, we're going to take it. We're not going to miss it. Let me just ask you a few quick. Charles, I'll answer your email once I see it. David says, a bit confused about the gold chart. Was that sharp down move buying? Well, there was supply there. No two ways about it. So let's have a quick look. Let's go back to it. This here and this here is massive volume. I think, well, remember, some group has forced the price down into a low area, which is why I've marked it. All right. Now, if that was all buying, we should have seen a really good retest of this area, or no demand up here. It's not happened. But having said that, the market isn't open at the moment. Now, I would wait, because what we're getting in here, well, you can see 4-hour chart, look at this. You're trying to trade in there, which I haven't been, that you try and do it, you'll probably get stopped out. And the reason you will is the market's not got its direction yet. But I can tell you that's important. That is an important area. Hence, I've marked it. And I've marked it here, and I've marked the close. What you don't have here, David, is you don't have a clear direction of price. You have whipsawing. Now, it's very, very important to understand what that is, because you don't know how long it's going to take. I want to see a clear break of this area up to the top, which I'll go long, or a clear area here. I don't have a VSA principle that tells me that. And finally, we'll look at the E-mini. It's very similar. You take the daily chart, and I know Donald Trump's got lots of comments and stuff, but actually there has been a lot of weakness at the top up here, and they're getting a lot of end of a rising market signals. But the market has not changed behavior yet. It's in an uptrend. And if we look at the daily chart, we can clearly see we get dips when we get news, dips when we get news, we get VSA indications coming in, stopping action, up it goes again. They test the area before the breakout. All of these are VSA principles. Now, at the top, it's going up on low volume. I would expect a corrective move on Monday. I would expect a down move in the Asian session, and also, and it could actually correct all the way to this low. And I'm ready for it because I've got everything ready. Well, Oscar, to go to your question, what does it mean if the market's going up and reducing volume? It's running out of gas. Imagine you've got a car and you've put a quarter of a tank of gas in there, and you're driving up a hill, and you've got your foot full on the pedal to push up the hill, and the petrol or the diesel is running out. Okay, so you're heading for the top of the hill, and suddenly, gradually, the engine has got no gasoline in it. What's going to happen to the car? You might get to the peak of the hill, which would be great, but if you can't, then you're going to fall backwards. Momentum will carry you forward to some extent, which it does. And momentum definitely drives price. But then suddenly, all of a sudden, you've pushed on the pedal, and the gasoline, have a look here, Oscar, just to make the point clear to you. Here's the move up. Look at the volume. That couldn't be clearer. The market's pushing higher, it's making new highs, but it's doing it on low volume. Be very, very cautious over the next 2 weeks. Well, again, I'll repeat this. This is exactly what we'll be trading as we go into a lot of the course that I'm doing will be live trades. They won't be PowerPoints, because we'll be looking at live markets, because that's the best way to learn, in my opinion. Conrad, what is the weekly chart looking like for gold? It was the question. My view has not changed at all. It's in an uptrend, okay? But this is where I've got a problem, right at the top. And when I say a problem, it's not a problem. It's okay. My internet's a bit slow at the moment, but basically, yeah, up here, it's done the same thing. It's gone up. And look at the volume as it's tried to go up. As it's rallying, the volume's diminishing. So I've said this in many webinars about gold. If it goes through 1850, which is a key level, it's gonna go. It's gone. Job done. So with that, I'm going to, because we've overrun a little bit, and I hope you've all enjoyed it, and I hope you've learned something. Yeah, details of the course, Stephen, it's basically TradeGuider.com/autumn. We now have 4 places left, so that's great. We're going to have a full house. I thought we would. You're all welcome. There is the details. It goes through the whole of December up until the 18th, just the day before my birthday. It's very much about learning to trade from the basics through to advanced, and we get advanced in the middle of December when we get to the live trading. We'll trade the fund account. I'm very hopeful of that, that we'll be able to show you that, but also my fund account too. And the registration page is here. If you want to register, it's just click on that. Yeah, Philip, I'll send you this link. That's fine. Okay, there is the pricing there. I'll put, Philip, I'm emailing it to you, and I'll also put it in the room. And then we will send you out the links first thing in the morning. So for those of you that have already registered, you say I didn't get a link, it's going out first thing in the morning. Good, right, let's have a quick look. Excellent. Okay, so Grigory, any final words from you before we wrap up? And we've got a very busy few weeks ahead of us. Lots going on.
Oh, wow. We are getting more and more different services which will help you to learn VSA if you would like to. It definitely requires time, and it will deserve that, because if you would like to trade and make your living from the trading, you definitely need to learn this methodology. And go to the site, check what we have, ask the questions if you really would like what we are doing, if you would like to learn methodology itself. So we are here for you. That's one thing. If you don't want to learn VSA, we also have services like alerts, educational alerts, stock scanning. You can use those services and adjust your trading style, trading strategy to these scans, or vice versa, adjust the scans to your trading styles and methodology. That will help you to trade, and you are very welcome to ask the questions again. So whatever you want to do, we have a lot already for you here. Most important thing, and especially this time, stay safe, save your families, take care of others. That's my word to you today. Back to you, Gavin.
Yeah, thanks. I'd echo the same thing. A good question just came in actually from let's just have a look. From Ryan, that's my son's name. Is like, is the early bird available still? Yeah, absolutely. And if we get another 10 sign-ups over and above the 50 limit, we'll take you. I mean, it's not going to, because it's going to be quite interactive. But yeah, no, we would absolutely honour that. That's absolutely fine. And look, the web page here says November 6th. I think if you click on the registration button there, you'll find it is at that price. Yeah. Good, Mustafa, thank you. Donald, thank you. Okay, so I'll echo Grigory's words there. Thank you for your time today. We have had a massive turnout. I'm not surprised, and this will go on YouTube. I hope you've seen the proof in the pudding, which is what it is. The volume works if you understand how to read VSA. And look, if you're looking at this on YouTube, go to volumespreadanalysis.com here and look at, in the players, we call them, the people that developed it. And my final words will go out to this gentleman, David Weiss. I know he's not well at the moment, but I believe he's still in hospital. But my blessings go out to David, because he's got a great book, which I massively recommend to anyone if you're going to get involved with VSA and Wyckoff, which is Trades About to Happen, a modern adaptation of the Wyckoff method. He published it in 2012, I believe it was. We've got an interview there that we've done with David. And my prayers and thoughts are out to him and his family right now, as he's probably going through a tough time. But the great thing about David is he will always, leave great education and great books and great webinars that he's done over the years. And so I hope you will all, in your heart, just in your mind, say a few words for David as we switch this off, and say, yeah, let's put our thoughts out for him, because he was a great guy and he's a great guy. And I'm not in direct touch with the family, but I do have a lot of customers that keep me informed of progress with his with his health. You know, we've lost Wyckoff, we lost Tom Williams. We know that's how things work in life. You know, we're not going to keep everyone, but when someone's made an impact on your life, certainly David did with myself, and a lot of the people around David, you know, they're inspirations for all of us. So have a great weekend, everybody. Enjoy your weekend. I think a lot of positivity has come from today's webinar, looking at the emails that are coming in, and thanks for those of you that are going to join the course on Monday. Will I be talking about belief systems? Sure, absolutely, because that's the key to it. That is the key. It's you got to believe to receive, and you've got to have the attitude of gratitude. Get all those things right, and you start trading, then success will follow. Take care. God bless. And have a great weekend, and see you next week. Bye-bye.